Welcome back to the channel, or welcome to the channel if it's your first time here. My name is Troy, and my goal with this series is to show you guys a small list of stocks that I find interesting and see if any of them, with your own research, might be a perfect fit for your portfolio.
It's like we were made for each other.
This series comes out every Friday at 8 a.m. Central Standard Time right here on the channel. And here on my channel, I don't do any of that fear, fire, or false promises, but instead I practice what I preach, which is long-term holds of market outperforming stocks that have low payout ratios and high dividend growth rates. You guys can help me spread the word on this series and this channel by leaving a like on this video, using the comment section down below to let me know what you guys think of this week's list, and then of course subscribing to make sure you guys don't miss any of my upcoming dividend related content. Now let's go ahead and dive into this week's list to find the best 5 stocks with ex-dividend dates between November 11th and November 15th, beginning with number 5, Cintas, stock ticker CTAS. Including today, I've now mentioned this stock 3 times right here on the channel, and if you go back to the very first time I spoke about it on November 10th of 2023, CTAS has outperformed the S&P 500 since then, so let's go ahead and look at the numbers behind this one. CTAS is a quarterly payer in the industrial sector, paying $1.56 per share per year, with a forward dividend yield of 0.76%. Cintas has been paying and growing their dividend over the last 4 decades. They have a 3-year dividend growth rate of 18%, a 5-year dividend growth rate of 22.31%, and a payout ratio of 33.32%. Now, at the time of recording, Cintas was trading 4.53% off of their 52-week high. They have an ex-dividend date of November 15th with a payout date of December 13th. And looking at this chart, you're going to be able to see the growth of a $10,000 investment while only reinvesting your dividends into this stock versus the S&P 500. CTAS would have turned that $10,000 into $128,606.35, which outperforms the S&P 500 by a noticeable $94,810.58. Next up, coming in at number 4 is Wingstop, stock ticker WING. Including today, I've now mentioned this stock 4 times here on the channel, and if you go back to the very first time I spoke about it, which was March 3rd of 2023, Wingstop has also outperformed the S&P 500, so let's go ahead and look at this one. Wingstop is a quarterly payer in the consumer discretionary sector, paying $1.08 per share per year, with a forward dividend yield of 0.36%. Wingstop has been paying and growing their dividend over the last 7 years. They have a 3-year dividend growth rate of 16.38%, a 5-year dividend growth rate of 19.61%, and a payout ratio of 23.31%. Now, at the time of recording, Wingstop was actually trading 31.56% off of their 52-week high, which is a significant dip. They have an ex-dividend date of November 15th and a payout date of December 6th. And despite being down 31.5% over the past 52 weeks, Wingstop has still crushed the S&P 500. That $10,000 investment would have turned into $135,368.75, which outperforms the S&P 500 by $103,225.46, keeping in mind that this one doesn't even have 10 years worth of history, so this is all in under 10 years. Next up, coming in at number 3 is MSCI, stock ticker MSCI. I've now mentioned this stock 9 times, including today, right here on the channel. And if you go back, way back to the first time I mentioned this on August 5th of 2022, MSCI has actually underperformed the S&P 500, but there's reasons behind that, and I want to show you the numbers on why I love this stock long-term right here. MSCI is a quarterly payer in the financial sector, paying $6.40 per share per year, with a forward dividend yield of 1.11%. Now, MSCI has been paying and growing their dividend over the last 10 years. They have a 3-year dividend growth rate of 22.29%, a 5-year dividend growth rate of 20.63%, and a payout ratio of 37.63%. Now, at the time of recording, MSCI was actually trading 8.51% off of their 52-week high, which helps contribute to that underperformance we just talked about. They do have an ex-dividend date of November 15th with a payout date of November 29th. And looking at this chart, you guys can see why I like this stock long-term and why I'm not worried about the short-term performance lull it is having because of its long-term performance. MSCI would have turned that $10,000, this time back to 10 years ago, into $138,176.96, which outperforms the S&P 500 by $104,381.19. With that being said, we've already covered 3 stocks in today's video, so you know if you like it or not. If you didn't already, leave a like down below to let me know you guys are enjoying this series. And as I said earlier, I want to hear from you guys down below. Use that comment section to let me know what you guys think of this week's list, good or bad, if you guys own any of these stocks, if you don't own any of them, which ones are most interesting, all the stuff. But now let's get to the rest of the list. Coming in at number 2 on this week's list is Eli Lilly, stock ticker LLY. why. Including today, I've now mentioned this stock 4 times right here on the channel, and if you go back to the very first time I spoke about it on August 5th of 2022, Eli Lilly has crushed the S&P 500, and it has numbers that support that, so let's go ahead and look at those. Eli Lilly is a quarterly payer in the healthcare sector, paying $5.20 per share per year with a forward dividend yield of 0.63%. Eli Lilly has been paying and growing this dividend over the last 11 years. They have a 3-year dividend growth rate of 15.21%, a 5-year dividend growth rate of 15.04%, and a payout ratio of 22.97%. Now, this is another crazy drop. At the time of recording, Eli Lilly was trading 15.79% off of their 52-week high, so maybe a really good opportunity. They have an ex-dividend date of November 15th with a payout date of December 10th, and including that 15.79% drop we just spoke about, Eli Lilly's performance versus the market is not even close. Eli Lilly would have taken that $10,000 and turned it into $149,749.14, which outperforms the market by $115,953.37. Now keep in mind, this crazy performance only earned Eli Lilly number 2 on this week's list, so you have to want to know who came in at number 1. Coming in at number 1 on this week's list is Comfort Systems USA, stock ticker FIX. This is now the 7th time I brought this stock to you guys right here on the channel, the first time being on August 12th of 2022, and since then, FIX has also crushed the S&P 500, so let's go ahead and look at the numbers behind this one. FIX is a quarterly payer in the industrial sector, paying $1.40 per share per year with a forward dividend yield of 0.36%. FIX has been paying and growing their dividend over the last 12 years. They have a 3-year dividend growth rate of 33.73%, a 5-year dividend growth rate of 23.37%, and a payout ratio of just 8.24%. Now, at the time of recording, FIX was actually trading 7.61% off of that 52-week high. So again, maybe another opportunity. They have an ex-dividend date of November 14th with a payout date of November 25th. And looking at this chart, you can see why it came in at number 1. A $10,000 investment into this one would have been turned into $279,689.36, which outperformed the S&P 500 by a minuscule $245,893.59. Now you know why it's number 1. With that being said, if you made it here to the end of the video, but you're watching it on or after November 11th of 2024, it would be in your best interest to make sure you're subscribed. This is because all the stocks I mentioned in today's video have ex-dividend dates of that week, which means if you're watching it after that ex-dividend date, you now need to wait 3 long, excruciating months before you get paid by your next dividend, and we all know
Ain't nobody got time for that.
Don't forget, before you go, use that comment section down below to let me know what you guys thought of this week's list, good or bad. And if you guys happen to miss last week's video, you did miss those ex-dividend dates, but the stocks there are still great nonetheless. Check that out right here. But until next time, see ya.